Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and it is Thursday, December 4th. Well, I don't have a new stock idea for you this evening, but I do have a pretty interesting question and a little bit of a story that goes along with the question. I think you'll find it very informative. And then after I field that question, then we'll talk a little bit about the market. And in our final segment, we'll look at some of the major indexes, and we're even going to take a look at Apple tonight. So the question was, a couple of days ago, I got an email from one of my readers, and he said, "Hey, TK, can a stop order be executed in pre-market trading?" So I wrote back to him, and I said, not a New York Stock Exchange stock cannot be executed in pre-market trading, nor can an American Stock Exchange stock be executed in pre-market. And I'm 99.9% sure that NASDAQ stocks cannot be executed, stop orders be executed in pre-market. But I told him he needed to check with his brokerage firm because I wasn't sure whether he entered the order improperly, because in order to trade pre-market, most of these brokerage firms have a separate platform completely that you need to use in order to enter pre-market orders. So I didn't know whether he made a mistake and entered it in that, or how he entered the order. I wasn't even sure he even got an execution, which I found out later on he did. Anyway, that was my answer to him. No, they shouldn't have been executed, and he should check with his brokerage firm, and he should challenge them on it. Well, 2 days later, he wrote back to me, and he told me, yes, I challenged them on it, and they broke the trade. They told me it was a mistake. But let me tell you what I think it was. It was some trader up on the desk of the brokerage firm that he deals with, who saw the stock trade down in pre-market, and he thought he could probably steal this guy's stop order, and when the real trading started at 9:30, he'd probably sell it out for a nice little profit for the firm. So this is the kind of hanky-panky stuff that does go on. So if the point is that if anything happens to any of your orders, you get an execution that just doesn't sit right with you, don't hesitate to pick up the phone and call that brokerage firm and to challenge them on it, because there is this little hanky-panky stuff that goes on. I mean, there are guys, if they think they can make 2 or 3 cents off your order without you realizing it, they're going to do it. So I thought that was a good question and a good situation, and hopefully everybody keep that in the back of your mind, because be aware. All right, let's talk a little bit about the market. Okay, as soon as I complimented the market at 3 o'clock, boom, down 250 points. So what did it accomplish? It accomplished 2 things. It got my indicator out of that overbought area where it was in for a day and a half, and it has gotten it down into a reasonable oversold area. I wouldn't say it's very, very oversold, but it's in the oversold territory. The other encouraging thing was that yesterday's low was not penetrated, which I mentioned in my pre-opening remarks. I didn't want to see that low penetrated, which it was not. And the third encouraging thing was the last 15 minutes of the day, the market ran up 100 points and closed on a plus tick. So that was encouraging. So, like I said, we are exploring the possibility of the markets trying to turn the corner here, and maybe try and do a lot better over the coming days. It's not chiseled in granite yet, but we think there's a good possibility. So when we take a look at the indexes in our final segment, I'll show you what we need to happen and what we don't want to happen. So without further ado, let's go take a look at some of these charts. Okay, we're looking at a daily bar chart of the Dow Jones averages, and I still have this trend line drawn in here because we continue to remind ourselves that we're still in this downtrend. So at least we forget that, and that's why this call is it's very tricky here, because this trend is still down. We haven't broken that trend, but we think there's a chance it could get above that line in the next day or two, but there's a chance it could not. So these are some of the possibilities that we are exploring. Okay, I want to remove it It's not going to change the pattern, but it may change the look a little bit. And so this was today's action. Did not close on a low of the day. We did not penetrate yesterday's low, which was good. But what we need to happen for the market to move forward, the first test of the market would be a close above this level, which was the high of Wednesday before Thanksgiving. We need to get above that. It's our first challenge. And what we do not want to happen is a close below that level right there. So within the next day or two, possibly even tomorrow, we may have our answer. Now there's some other looks of this pattern that I'm exploring also. This reversal day here may very well turn out. I'm not saying it's going to, but I'm thinking ahead. This may very well turn out to be one of those dangling participles that we've always talked about. It also could represent a head of a reverse head and shoulders that may be forming. It's still very early for me to say aha, but the possibility does exist. For instance, this whole pattern here could eventually turn out to be the left shoulder of a head and shoulders, and this being the head. That's one possibility. That would also sit in with the fact that maybe the market wants to do better. But the market needs to get above Wednesday's high for any of this looking forward, so to speak, can have any substance to it. These are all just possibilities that we're looking at. Now remember, a close below this line here, which may be the neckline, might indicate the fact that the bottom may not be in yet. So those are the two things we're looking to happen: either a close above Wednesday's high, or a close below this low here. Okay, let's move on to one of the other charts. Although they all look the same, I'm going to run through one or two of the others. All right, here we have the Russell 2000, and there's that trend line again, just to remind ourselves that we're still in this downtrend, and that trend line has not been broken yet. What we need for this chart, we need a close above, that's Wednesday's high right there. Just similar to the Dow, we need a close above that high, and we do not want a close below that level right there. And quickly, we're going to take a look at Apple, because it looks so much like the averages. You know, I've always said, as goes Apple, so goes the market. And we have a similar look here too. Looks actually, to me, it looks a little bit more stable than the Dow averages, because we've broken this. We don't have that major trend line that we've been dealing with. Like this trend line here has been broken, and even if you wanted to say that was a trend line, that sort of got broken. So we don't have that same problem with this chart as we have with the averages, because this main down channel has been broken by this. So this is just interesting. I wanted to bring this to your attention, because it's probably a little bit further along in its formation than some of the indexes. So keep an eye on Apple also for some direction. And once again, if we can get a close above these levels here in Apple, that would sit very well for the market. Okay, so I'm running out of time. That's my view. Like I said, we're exploring these possibilities. I'm not saying it's a sure thing yet, but we should know in a few days. So till tomorrow, this is TK signing off.